Hello, you're listening to What's the Deal, our investment banking series on JP Morgan's Making Sense podcast. I'm your host, Amaury Guzman from JP Morgan's Leveraged Finance Desk in New York. Today, I am joined by a returning guest, Kevin Foley, our Global Head of Capital Markets, to discuss market developments since our mid-year conversation in July, as well as to explore the outlook for global capital markets in 2025. Kevin, welcome back to the podcast. Great to have you.
Amaury, great to be back. Thank you for having me.
All right, why don't we dive right in? Kevin, almost 12 months have gone by in what seems, at least to me, the blink of an eye. But in reality, a lot has happened this year. How would you characterize market developments almost 12 months in?
I'd say it's been a year of, I'd call surprises. The economy's been more resilient than we would have thought. The expectations around rate cuts coming into the year were much higher. We got them less of and later in the year than what was expected. Obviously, because that ties back to where the economy has been and the resiliency around it. And we obviously got through an election season as well. And in a lot of ways, people would refer to as a Goldilocks environment right now. There is belief that you're going to continue to have some tailwinds from the Fed easing. You've got a view of less regulation under the next administration. That's the belief. People are putting on rose-colored glasses with regards to what tariffs or changes in immigration policies may be and the impact that may have on employment. And right now, there's a very optimistic view about the resiliency of the economy and the ability to continue that, and starting to see that across debt and equity markets. And I'd say the animal spirits right now are very much alive and strong.
Markets have reacted accordingly, not only in terms of asset prices, where equities have rallied significantly, on the credit side, where spreads are tight. How would you characterize what the market activity has been on the primary side?
So we've been on record levels volumes when you particularly look at the leverage finance market, right, and the leverage loan market, to be even more specific. Interestingly, 90% of that activity has been refinancing driven. So we've been very quiet on true new issuance coming to the market. So it's a lot of recycling of capital. It's created a very borrower-friendly market because of the lack of new issues, fair amount of cash still on the sidelines. There's a natural inflows that happen from coupon clipping that happens every month with any fixed income product. All of those have created a very favorable environment of demand outstripping supply. And that has driven a heavy refinancing wave. I think as we start to think forward to 2025, the question at top of everyone's mind is M&A going to pick up, and we start to see actual new issuance coming to the market? You can have volumes come down next year, but if the mix shift happens towards more new issuance tied to M&A, that starts to bring that supply and demand a little bit more in balance, which will create, it's not necessarily a bad thing, but it can create a little bit different dynamic than what we're seeing right now.
No, that's a great take. And I'm going to come back to some of your references on M&A and the outlook. But before we do, I want to go a little bit deeper in one of your references that you just had on the U.S. election specifically. Results are now behind us. They include a sweep of Congress. As you mentioned, asset prices have been on the move. Equities rallying, rates higher as the market tries to, if you may, anticipate the impact of the policies. How would you assess the balance of risks and opportunities from what you may call the expected policy shift?
It's not an easy proposition right now because I think we do have a market that feels like it's priced for perfection. And while there's a lot of reasons to be optimistic, and the economic results are supporting that, and there's certainly the optimism with the election behind us, what that may mean on a regulatory front, what that can do from M&A activity and other business activities, you could debate whether a lot of that has already been priced in. And when you look at the multiple expansion that we've seen in the equity markets, that is pricing in a fair amount of growth. You look from a rates perspective and more in the high yield market and the investment grade market, you look at a spreads basis, we're near record lows. The high grade market has taken out its historic lows on a spread levels. The high yield market is several hundred basis points inside its non-recessionary average. So you've got a market that in a lot of ways is priced for a perfect economy and a perfect world. But at the same time, we've got geopolitical concerns that are still out there. We're not entirely sure if inflation has been whipped. And there are things that under this new administration that could be viewed as some headwinds for the economy. So while we're optimistic and you can feel good about the outlook, it's not a throw caution to the wind environment.
Yeah. I mean, I just had you walk through the fiscal side of the puzzle. But for instance, if we were to look at it from the monetary side of things, for instance, the Fed has outlined that they will remain data dependent, right, in assessing near-term policy decisions. The market itself is pricing additional cuts in December, maybe January, March, who knows, and potentially quarterly thereafter as the market expects bring the policy rate down maybe closer to the 3.25%, 3.5% range. Do you think these kind of fiscal policy plans throw a wrench in those plans?
I think it's when I started this talking about 2024 being a year of surprises, we obviously saw a lot less cuts than what the market was expecting. And the market was comfortable with that, right? They focus on the fact that here, the market got comfortable with less rate cuts during the course of 2024 because the economic picture continued to be strong. You can definitely have a debate about here, the stimulus that's happening from less regulation. Some of it's positive sentiment too, around the anticipation of that. Is that going to then prevent the Fed from doing some of those policy tightening that is expected? And are they even going to have the luxury to even debate it? We're still not at that 2% inflation target. There are still things out there that are by definition inflationary. Take, for example, the fact that as we're shifting towards more sustainable energy, that by definition is inflationary. When you look at the investment that's needed on the defense front because of the geopolitical picture, that is inflationary by definition as well. So whether they're going to have the luxury even easing policy further, is it going to be the challenge that they're facing now? Is that going to increase because of the stimulus that's coming in from other aspects? Yeah, that's going to be something we're all going to be watching in 2025.
Thank you for that, Kevin. I mentioned I was going to go back to the M&A point. We recently had Alok Gupta and Matt Gell on our podcast discussing tech sector's IPO and M&A trends in EMEA. They were positive about the IPO market in 25 and 26, but they did note that companies are still cautious about M&A due to regulatory uncertainty. What are your thoughts on this outlook, and does this echo with what you're viewing at a global level?
So there's definitely a lot more enthusiasm about M&A activity in 2025. I think some of it has to do with a year ago, we were sitting anticipating when were we going to actually see an economic slowdown and anticipation of a recession. That recession never showed up. And so while the economy may have slowed down, it's been more resilient. So I think there's an increased confidence in a lot of boardrooms to think about a backdrop that allows them to even think more strategically about what they want to do. So I think that's a factor. The rates coming down, that's another positive factor. I do think the U.S. economy has been more robust than other parts of the world, in particular when you compare the U.S. with Europe, that you probably would expect to see the U.S. leading the way on the pickup in M&A activity. We've been at near historic lows for the level of activity for private equity shops exiting their investments. So we expect a pickup on that, which will be, say, an opportunity for strategics to add to their portfolio, to look at other sponsors who may be trying to expand the footprint in a particular industry. There's going to be a lot of opportunities on that front. So yes, I think that the tailwinds are coming. We're expecting a lot more activity. Some of the concerns that we have, if any of them come to fruition, you can see them derailing that M&A pipeline pretty quickly.
Now, Kevin, as we sit here today in December of 2024 and we look forward to 2025, what are you keeping an eye on for what could be material risks to markets next year?
Well, I think a lot of the risks that we've seen in 2024 remain. I think you're going to continue to look at the long end of the Treasury curve, where we're going to continue to be running fiscal deficits. We are going to have to increase borrowing. At the same time, the buyer base that's been buying treasuries over the past 5 to 10 years, the banks, the Fed, foreign entities, foreign investors are all pulling back. So despite what the Fed may do in cutting rates in the short end, I think at the long end, you continue to have pressure upward because of a supply-demand imbalance.
Got it. Thank you for that assessment. I think that resonates a lot with what we're hearing from other market participants. Now, the last topic that I want to review with you today for benefit of our listeners is our upcoming Global Leverage Finance Conference, which is happening in February of 25. It is a special edition for all of us at JP Morgan, as well as for market participants, given it's our 30th anniversary of the conference. Why is this year conference particularly special for market veterans like yourself?
Well, I think you stare at that number of 30 years and you look at what's happened in markets over the past 30 years. Pretty astounding when you start to look at a lot of things from .com to GFC, COVID, and that's just to name a few. So there's been so much history and development in the growth of the market. The conference, in a way, has grown alongside with the growth of the market. And so it's kind of watching both grow up and expand over time. And it's become an incredible ecosystem. And I think in a world, we've watched the evolution of roadshows become shorter and less in person. The conference has taken on even more of importance because it is definitely a guaranteed couple days where investors and lenders are able to get with issuers and borrowers face to face and really get an update on where things stand in the economy, where things stand with those individual businesses and how they're performing. So we have the good fortune of JP Morgan and being a leader in the market and really nurturing that ecosystem. It is thrilling to be a part of that. And it's just been fun to watch it grow over the years.
Thank you for that. And what themes are you expecting to emerge from our 30th Global Leverage Finance Conference upcoming in February?
I think as you think about the themes for next year, I think it's a lot about what we've been talking about. We're going to continue to gauge the economy. You'll have had the new administration in the office by that time for over a month. Maybe we've had some progress on the geopolitical front. We're going to be debating where Fed policy is. Feels like it's more of the same, but I feel like you take the best pulse when getting out there and hearing the management teams and the CEOs and CFOs of all these businesses and a lot of different industries from across the globe really give you a good insight. And it's a great pull-up at that to understand where we are in a lot of things we've been talking about today.
Kevin, thank you so much for that. We really appreciate your time and you coming and sharing your insights for what has been a lot of market activity in 2024, as well as your outlook for 25. A big thanks to Kevin Foley for joining me today.
Amaury, thank you. And I'd like to say to all our partners out there, thank you for placing your trust in JP Morgan. Thank you for a terrific 2024. We're looking forward to a great 2025 and hope you and all your families have a wonderful holiday season.
And thank you to our listeners for tuning in to another episode of What's the Deal. We hope you enjoyed this conversation. I'm your host, Amaury Guzman. Until next time, goodbye.
Thanks for listening to What's the Deal. If you've enjoyed this conversation, we hope you'll review, rate, and subscribe to JP Morgan's Making Sense to stay on top of the latest industry news and trends. Available on Apple Podcasts, Spotify, and YouTube. To stay ahead of the curve, sign up for JP Morgan's In Context newsletter, packed full of market views and expert insights delivered straight to you. To subscribe, just visit jpmorgan.com/in-context. This material was prepared by the Investment Banking Group of JP Morgan Securities, LLC, and not the firm's research department. It is for informational purposes only and is not intended as an offer or solicitation for the purchase, sale, or tender of any financial instrument.